Hello, everyone, and thank you for joining today's live stream. I'm Tammy DaCosta, and I will be bringing you today's crypto news as well as other markets moving events. So the big news for today, or the big focus, is back on tariffs, because we've had Donald Trump now officially implementing those 25% tariffs on Canadian and Mexican imports, as well as 20% levy is now going to be imposed on Chinese imports. And that's above and beyond the levies that we've already seen. Well, basically it's 10% extra additional levies to the previous 10% on Chinese goods. So now, why does this even matter? So as I said, because of the implication on what it means for imports, and imports impacts goods and services, and it impacts trade wars. And this isn't good for markets, not only for the markets or the actual economies that are impacted by these tariffs, but rather as market sentiments as a whole. So if we are looking at those implications, we have also seen that the economies are now fighting back. And they're saying, okay, fine, Donald Trump, President Trump, you are doing this to us, but it's not going to be the same scenario as you saw in your first term back in 2016, where the countries were a lot more submissive. Now, why does this matter, and why does it even, why are we talking about it when it comes to crypto? So simply put, this means recession fears. So now that goods are, if imports become more expensive, companies in the US that are now importing a lot of goods from those other countries now are faced with the dilemma of, do they now pay those extra fees for imports, or, as Donald Trump wants, do they produce goods domestically? And what does this actually mean? So the ramifications are now that that competitive advantage or comparative advantage that comes with the benefits of free trade agreements are now wiped out, and the fears of recession because of higher costs and higher costs for goods is now rising. And that filters through to crypto markets. So we saw on the weekend, and we can see that over the past week, we have seen a lot of volatility come back into markets. And just by looking at the CoinW site today, we can just see, just by glancing through it, that it's back in the red. And this is a very different scenario to what we saw over the weekend. So if we look at crypto and let's go into Bitcoin, what we see today, if we're looking at BTC USDT, so this is Bitcoin futures on the CoinW website, and what we saw on the weekend, well, let's go to January's events. Okay, this was the January high, and that's the all-time high, above 110,000. That was in line with basically the Trump inauguration. Then throughout Feb, we did see a pullback. We saw prices slump, and that market sentiment, the upbeat sentiment that was rising or pushing those prices to that all-time high, started to dissipate, and markets went back into the red. From there, and that was the end of last week, the 28th of Feb, so on Friday, we saw Bitcoin basically fall below 80,000 for the first time since November. And this rattled fear, and it brought into consideration the fact that that bullish sentiment is now gone, and bears are now taking back control. And then we had the announcement of the strategic reserve, or the official announcement from Trump, and we saw prices rip higher. Okay, prices then got to the midpoint of that same January to February move, and then we saw once again yesterday took place, and those tariff fears and just all the market sentiment started then turned into recession fears once again, and we saw this big red candle, which has been followed by another red candle today. So it's not looking like a very good picture for crypto, but then again, neither did last week, and then the weekend happened. So I think we can all agree that what this does show is that there's definitely a lot of volatility at the moment, and volatility, to explain it, is basically if we're using something like the Bollinger Band, okay? Bollinger Band is an indicator that works around the 20-day moving average or 20 period. So the 20-day moving average is shown by the orange line over here. The Bollinger Band, the upper band, is 2 standard deviations above that mean, and then 2 standard deviations below. And this measures volatility in the sense of, okay, how much a price is actually differing from this mean. And when it broadens out, it shows that volatility is increasing. And this often is a resemblance of fear. And fear drives markets. So how do we actually trade these events? So we've discussed, okay, what it actually means for markets. Generally, when we now have recession fears back in the picture, and we still have important economic data to look forward to this week, such as, well, we've got non-farm payrolls, which is employment data, and for the job markets, it represents the labor market in the US. And this is going to actually be a very important print, because now this is showing how February performed, or how the labor market performed in February. And that was the first month where Trump was actually official president. And this sets the tone for the interest rate decision on the 19th of March and so forth. And like it or not, it does have an impact on crypto, whether there's a strategic reserve or not. So we need to also look at, what does a strategic reserve even mean? Well, up until now, or, for the past few decades, the US dollar has been the reserve currency. So a lot of things, including Bitcoin and crypto, trade against the US dollar. And so if countries wanted to do trade, whether it's buying commodities or, in the sense, whether it's buying crypto, they're looking at what is the price relative to the dollar. And this gives the dollar some form of value. So what happens with the strategic reserve now is, if prices continue, or if they're pegged to the dollar, any other country that wanted to do trade with the United States would then now still have to go through the US dollar and through Bitcoin, or through whichever coins are part of the strategic reserve. And if we've got a scenario now where there's tariffs and trade wars, what happens to the whole importance of a strategic reserve if nobody actually wants to trade with the United States? Well, that's not happening anytime soon, but these are things that we need to consider. And these are factors that impact all cryptocurrencies. And looking at Bitcoin, since this has been the leader, if we look at price action and what's happened, we did see those periods after January, after that high, we did see the period of consolidation, especially throughout this period. And then, so from basically, if we're looking from February, the beginning of Feb, and then we're looking towards the 23rd of Feb, we already saw that period of consolidation, and that was before that big pullback that saw prices dip below 80,000. We then saw the recovery, and prices rose back to the 20 period moving average, and now we've seen that contraction again. So once again, now the lower Bollinger Band is now holding as support. Okay, and then a break below that, so that is around, let's call it around 81,000. So it's actually 81,483. So let's say 81,500. So now this level is currently support, and it leaves the door open for further pullback back below the 80,000. However, in contrast, even though we do have these announcements of tariffs and we have had some countries such as Canada and China retaliate, Mexico has said, okay, we are giving the United States up until Sunday before we actually come out in public with how we're going to retaliate. So it does give President Donald Trump, although I doubt he is going to negotiate, it does give a few days of that negotiations. And we have seen that in periods like this, prices react very quickly and very aggressively to these different announcements. So it is something that we need to keep into consideration or take into consideration. And then there's other factors, as I said, economically, that could now continue to weigh on prices, but we could have another surprise or something like the announcements on the weekend that then, absolutely flips the cards and prices can go either direction. So, how do we actually trade these markets? First thing is to determine the trend. So, if we're looking at going up into the election, I think we could all agree that there was a very strong bull trend. Okay, and we'll see that when we, more importantly or clearer, when we actually go to the trading view charts. But we also need to remember that the whole saying goes, the trend is your friend until it ends. So we need to determine which trend are we actually looking at. Are we looking at the long-term trend, which is more appropriate if you investing or if you're a hodler? Then you're not really worried about the short-term, drawbacks or the pullbacks, because your whole investing or your focus is on where crypto is going to go in the longer term. And that's the same as, for example, if you bought crypto in 2017, we have had periods of like really big bull markets and pullbacks, so bull and bear markets. And we've seen that those that were trading or were holding Bitcoin and stayed throughout, even when prices went, for example, to 19,000 in 2017, if you had bought then, well above 19,000, and then you had gone all the way and continued to hold throughout 2018, your investment or your portfolio was really taking strain, and a lot of people pulled out at that time. But for those that actually had the patience and just left crypto such as Bitcoin in their wallets, they are definitely still smiling today. So those are the considerations. But if you're trading and you're doing something like intraday trading, you must realize you're putting down a portion of the deposits. Well, basically you're only putting down a certain percentage of margin, which is a lot less than you would have to put down if you were actually buying the actual coins through the exchange. And this makes, if prices go in your favor, then great. For example, if you're going short here and you're selling and the market dips like this, yes, that's great, because you are making, for example, if margin's 10%, then you are only required to put down 10% of the actual exposure, and your gains are now amplified by 10%. However, in contrast, if prices go in the opposite direction, the same can be said with your losses. So we have to take into account the risk and reward. So this is where protective stops become really, really important. And why is it protective stops? Well, protective stops or guaranteed stops are basically you pay a premium, and that is to say, okay, fine, I'm okay to pay this premium, but regardless of what happens, when the price hits a certain point, my position is going to be liquidated. So this gives you an additional layer of protection rather than using a normal stop, where if we get prices, like let's look at a very volatile move, and then we can see how these stops would play out. So for example, if you got a price move like this, okay, so you get an extreme red candle, and this is on a 15-minute chart. If you had a stop, for example, at the bottom of this wick here, at, let's say your stop was at 85,267, okay? Or no, let's say it was at the bottom of the Bollinger Band over here. So this was 85,426, okay? And then this, basically this candle happens. What happens is, because there's volatility and there's such a sharp move down, you can see that the CCI, the Commodity Channel Index, which is the measure of momentum, and it is an oscillator, we can see that steepness represents the rising momentum of the bear trend. What happens, because this is such a quick move, is there may not be liquidity to actually close you out at the specified price. So you would be closed out at the next best price, which was at about 83,496. So you're actually making a loss, if you were long, of a lot more than you initially anticipated. And this now impacts your portfolio and the amount of leeway you now get, especially when you're actually trying to look at your portfolio and trying to see how well your performance is. Because you've only, for example, if your stop loss meant initially that you were going to lose $100, and the market gaps, or there's a factor to consider like this, where there's a very quick drop in prices and significant, then all of a sudden from $100, let's say your losses are now at $300. You haven't planned for that, and that is going to impact your trading portfolio. So in scenarios like this, especially when there's high volatility, it is important to actually realize that risk reward ratios, we need to also account for the volatility and the possibility of these markets actually gapping. And this is why protective stops are actually really, really important, especially in these market conditions. And especially when we still have a lot of economic news that is coming out, and that could, as I said, sway markets in either direction. And this isn't something, it's not anything new that we've seen with Trump. However, it is new for crypto because we now have a whole different fundamental perspective or fundamental outlook that is now connected with the crypto market. But even if we have a strategic reserve and whatnot, we need to remember that this is still, crypto would still actually be linked to risk assets, and it is still seen, well, it's going to be influenced by the economic outlook. And that's the main theme that is now back into play, and it is not looking really good. We're seeing a lot of that fear coming back into markets. And for the whole crypto environment, this isn't a pretty picture. I mean, for Bitcoin at the moment, Bitcoin futures are now trading, if we look at the daily time frame, so we're seeing 9.39% lower. So this is really, really big for the crypto markets. And so we can see Ethereum, a lot of these are now in double-digit losses. So once again, we see that fear. But last week, we saw the same scenario, and then we saw a very different picture over the weekend. So now let's go to the coin market cap, and now let's look at this. So if we look at an hourly time frame, okay, now we need to remember that we were looking at the futures contracts. So these prices, or at least the retracements, will be different because this is now looking at the coin market cap and basically what's showing on their side or on their exchange. So if we're looking at the hourly, okay, so on the hourly time frame, we can see if we're looking at the top 10, these are looking a lot more upbeat. But as I said, the 24-hour losses, we can still see it's not looking pretty. For USDC, now one thing we need to also remember is what benefits in the situations like this when we have a lot of fear, and that's generally your stable coins. So USDC, it hasn't really gained much, but it is trading flat, and that is one of the, let's say, safer options that we generally see in these times. A bit off topic, but another important thing that I saw over the weekend is we saw in a lot of the other Bitcoin dips or pullbacks that companies like MicroStrategy, who are the biggest holders of Bitcoin ETFs, they generally have been increasing their positions. Over the weekend, or actually on Friday last week, when we saw prices or Bitcoin drop below the 80,000 mark, this was the first time in a long time that MicroStrategy actually didn't add to their positions. And to me, that was also a bit of a warning or just a cautionary approach. And potentially we can say, okay, but then again, they didn't know that the strategic reserve was going to be announced. No, they didn't, but they have been one of the biggest influencers saying that, okay, Bitcoin and crypto are definitely the way of the future. So the fact that they didn't add to positions, that did show that, okay, they were actually not more cautious, but they obviously comfortable with the amount they're holding at the moment, which is a large amount as is. But it's also displaying that, okay, we've seen a lot of optimism, going into the Trump inauguration. We have seen that pullback, and officially, if we look at the January to Feb move, that's over 20% pullback. So that is actually, if we look technically speaking, it is now transitioning to a bear market. But as we said that, we saw prices recover, and now we're seeing that bear markets coming back into play. Now, if we look at coins like Cardano and Ripple, over the past week, with the announcements of the strategic reserve, those coins definitely surged. And so on a weekly basis, those coins are still in the green. But over the last 24 hours, everything is pretty much taking strain. If we look at banter bubbles, once again, we see a lot of red. And this can also be seen in stocks. And this is important because this is where we see the correlations. And correlations are basically, we have been seeing a lot of the US stocks, while Bitcoin or crypto has been following in the footsteps of the US stock market, which has also really, really been gaining over the past few years. And across the board in recent months, a lot of those stocks or those stock markets, such as the NASDAQ and S&P, have also been hitting all-time highs, and so have crypto. So there's definitely been a relationship, and we see that relationship play out today when we look at the stock markets, and we also see that same red across the screen. So the same scenario or the same theme is playing out there. So these are definitely things to take into consideration. And one more thing before we go to the charts is if we are looking at, okay, so we've got the trading difference. This is not what I was looking at. But if we're looking at liquidations on the four different kind of, oh, no, I can't find it. Okay, yes, this is it. So if we're looking at liquidation levels, and for example, this is Binance, and we're looking at Bitcoin USDT. So here are liquidation levels, and this basically represents at what point is, our prices or our traders and investors, what is the likelihood of their positions getting closed out, getting liquidated? And we can see that there are different zones that resemble a higher likelihood of positions getting liquidated. And this is important when it comes to also seeing at which levels to be cautious on when you're entering and exiting positions. So the more likelihood, let's just see if I can find what I was looking at earlier. Okay. Okay, I'll switch over to this now. It's on, I'll find it now. But basically what that means is if we look at price action, I'll get the right one now. If we're looking at a lot of those liquidation levels and the levels at which those positions have been closed, it definitely coincides with the volume figures and the shifts in sentiment that we've been seeing. So, for example, over the weekend, what happened was last week we saw bearish sentiment. People then start selling into the bear market because prices are going down and they expect prices to continue dropping. And then if you see something like over the weekend where we got that surge, what happens to those short positions? They cannot sustain they can't keep the margins, and so they get closed out. And if you are short, you are selling and you have to buy back to close. So that contributes to driving prices higher and so forth. And that's how these prices actually, that's what also contributes to the momentum and the pace of prices either rising or declining. So looking at, once again, if we are looking at Bitcoin, and this is on also Bitcoin futures, and we see that price action, we can start now seeing clear areas of, okay, where there are actually clear areas of support and resistance and some of those key zones. We have also spoken before about gaps and about candles. Now this candle, we've said before, so this is a doji candle, and this is particularly a dragonfly doji, which means that even though sellers tried to push prices lower, there was a very strong, basically bulls came back with vengeance, and we saw that they pushed prices higher, and then we saw a little gap, which was that optimism coming back into markets, prices rising back above while briefly retesting the 20-day moving average. And then very quickly, we saw that bearish sentiment coming back, filling that gap. And now we are busy testing that lower band on the of the Bollinger Band. So now this brings this lower level, which interestingly enough, if we look at the move from the Friday, from after the Trump was announced president to the Monday, and where markets gaps higher, we have seen over here this move was on track to actually closing that gap. We then saw a pullback. So for now, we still need that gap to get closed. So if prices now hit below the or go below the low that we saw on the Monday after the presidency was announced, so that was on Monday the 11th, and that low is 80,670. So we did see a dip below there, but it didn't hold. So we would need to see, so the next level that we're looking at, as I said, it would be the lower Bollinger Band, and then we'd look at this low, and then 80,000 is still a very big level, and then we are leaving the door open once again for a retest of 77,930, and that could then see additional selling pressure. So these are important times, and there are a lot of important considerations. So even though we got a slight uptick in sentiment over the weekend, now the scenario for me, it is still looking bearish, because now what else can actually, a lot of things are now priced in, and as I said, the strategic reserve has now, we were waiting patiently to see when that's going to be announced. It has been announced, and now fears go back to, okay, but how's the economy looking? What are we actually going to do? Because there's tariffs and employment data, and the fact that economies, GDP numbers and sentiment indicators are coming out very, very pessimistic. How do we now counteract that fear? And generally, fear for markets such as equities and crypto, fear is not a good thing. Fear for gold is generally a good thing as it drives gold prices, but we are seeing markets abroad very confused at the moment, because Trump has threatened tariffs many a time, and I think a lot of people didn't actually expect him to go through with it, and especially with the Canadian and Mexican tariffs, and that is definitely going to have broader implications. We also need to remember that there are going to be additional tariffs this month, which will include additional 25% on aluminium and steel imports, as well as on copper, and that's for any countries. So those are definitely playing a role in the whole narrative and the potential trajectory for prices, including for crypto. So when we look at, for example, the altcoins, let's just look at, for example, Ethereum. So it's the same sort of scenario. I'm just using the basic Bollinger Band. We have seen prices broke below. We saw that gap lower, and that was in Feb. And then this was the previous low that we were looking at. Now, unlike Bitcoin, that has had that increase over the weekend, we haven't seen the same optimism with Ethereum. We did see prices trying to go higher over, well, basically, with regards to the crypto reserve announcement and everything, prices did shoot higher, but we see this red candle below the 20-day moving average, and that's reflecting, okay, cool, yes, we've got this news, but it's not actually good enough to bring back the bulls. So we are seeing downward pressure, and the fact that we've had two gaps lower that haven't been filled, that is really bearish, and especially in terms of altcoins. So the whole scenario, or the whole picture for the crypto industry, has turned negative once again, and this is where the risk management really, really becomes your main priority. Because as much as you want to actually make gains, you need to protect your capital. Otherwise, when there's situations like this where bearish sentiment in bear trends, if you are a bull trading a bear trend and there's fear coming into the market, generally what happens is that fear lands up filtering or spreading through markets a lot quicker than when we see positivity. So these are definitely factors to consider, and to be a lot more vigilant and a lot more cautious, especially when it comes, as I said, to protecting their capital. So this is where protective stops. I would advise using protective stops. Even though you're paying a premium, at least you've got the guarantee, and you can actually then look at your positioning, and you can look at your trading plan and say, okay, if markets do go against me, and then at least I know exactly how much I am putting at risk. So despite what happens, whether it's on an economic front or basically price levels and trading psychology, you are now protecting yourself, and you are setting a buffer to say, okay, fine, regardless of what happens, at least I know that in a positive scenario, yes, I'm winning. And you could use trading stops that when the market moves in your favor, that stop then moves with it once you're making those gains. But then the protective stop initially needs to be there to say, okay, fine, if at the worst end of this position, how much am I actually going to be putting at risk? So that, to me, is the most important consideration when looking at these markets. So if we turn to something like Ripple, once again, we saw that positivity, and this is a really, really big, this is a 34.17% move, and that was on Sunday. That is huge. But to say that, prices tested the upper Bollinger Band, and then on Monday, we saw 18.84% of that prior 34% move being wiped out. And now we are seeing more bearish pressure today, but not as much as we are seeing in the other altcoins. So these moves are definitely significant. However, this body is still within the body of the previous candle. So it means that bears are still in control. And then, so this is basically a harami. And then this is also bearish, but it's still within the confines of the body of that positive candle that was seen on Sunday. So for Ripple, it's not completely bearish just yet, but still we can see volatility. If we're looking at measuring the Bollinger Band, once again, just looking at the Bollinger Band, the fact that it's widening means there's volatility, which means it's fear, which means be careful. So these are things that we should take into consideration. Once again, if we're looking at the crypto coins heat map, and this is on TradingView, we can see that overall, while Tether stablecoins, they trade in flat, but majority, and you get something like Tron, Par, that are trading slightly higher, but most of the market is actually focused on that fear. Last thing I want to just touch on quickly is if we are looking at we've got unemployment data, and we've got, let's see if we've got the heat map here. Okay, so we do have some, interest rates, but this is the current rates. So this isn't really showing what we are basically focusing on going forward, but this does matter. And then what I actually wanted to look at is, here we go. Let's look at the economic calendar. And this is the main events. If we're looking at high impact events, only high importance, then we do see that we've got China having the National People's Congress. We've got ISM Services PMI, that's expected tomorrow. And this is to show services like Purchasing Managing Index. This is once again showing how optimistic or pessimistic the services industry in the United States is. And this all weighs on sentiment. We then have the ECB interest rate decision on Thursday. And what comes out of these meetings is, so we are expecting another 25 basis point rate cut. But what comes here is the ECB press conference is also important, because we'll have ECB President Christine Lagarde saying how she feels, or basically acknowledging a lot of those themes, such as tariffs and the economy. And this once again goes into the sentiment and the future forecasts, which are impacting economies as a whole, and that is going to filter through to cryptocurrency. Friday is a very big day, because we've got imports and exports. Well, we've got trade data from China, who is the second biggest economy in the world. And then we've got that employment data, and job data from the US. And then we've got Fed Chair President Jerome Powell, who will be speaking. And this sets the tone for interest rate expectations, which will also filter into the whole narrative of, optimism or pessimism of how their economy or global economies are expected to perform. Higher recession fears are not good for any risk assets, including crypto. So we just need to be a lot more cautious trading in these types of environments. Okay, that's all from me for today. I hope you have a wonderful day. Thank you for joining. And then tomorrow we'll get into more of the technicals and just look at some maybe important levels on both the bullish and bearish side, and maybe just see how markets are actually digesting that news, and if there are any more developments and factors that need to be considered. Thank you once again for joining, and I will see you all tomorrow.